Hi everybody, I'm Yogeshwar and welcome to this analysis session. A stock market is a place where everybody comes with an expectation. There are people who come here to make money every day. Then there are people who want to build a portfolio. Then there are people who come here to do some swing trading, some trade options, some trade commodities, some trade forex. In fact, all over the world there is a stock market. Every country has one. And I was a very mature stock market, and the basic bias of the stock market is up. That is a basic bias. Otherwise, nobody will come here. Nifty used to be at 1,000, and now Nifty is at 15,000. So every stock, if it rises up, that's what people expect from the stock market. But stock market is a place which is full of uncertainties, of bad results, a change in policies, a political upheaval, something happening in USA, China, other places, is continuously changing the prices. So it is all about how the prices will behave, and technical analysis helps us in finding out how the prices will behave. Today, in one more technical analysis session, let's see how the market is behaving. Is the price balanced? Is it imbalanced? What are the top blue chips companies? What are they doing? And right now, with a very expensive valuation, will it go further up as every growth stock does, or will it come a little down as undervalued stock does? So let's go and look at analysis of the market. I'll share the screen with you now. Okay, so let's look at the market. I hope all of you can see the screen. I'm calling from Mumbai. I stay in Mumbai, and you can see my trading room. I love to read. And this is the Indian stock market that we are seeing. If you see here, this event, this was a corona crash. This was a corona crash here, and the price becomes imbalanced. And I've been talking to you about balanced lines and imbalanced lines. This is the balanced line. So the balanced line here that we are looking at, and we saw that the price became imbalanced during the corona crash. Then it again went back and tried to gain balance here, and now it is trying to is taking support around this level. So we have rallies, we have retracement, a rally, again a retracement, again a rally and a retracement, and we can see there is a big difference for the moment between the balance line and the price. So with a P of about 40, from a fundamental point of view, the market is expensive. But with corona receding, growth coming into various economies, money flowing, jobs coming back, so the sentiments are very positive. So uh, I don't see any major correction coming, but regular corrections are going to happen into the market, and that's what is happening. So this is an area where consolidation is likely to happen for the coming few months, and that's what is happening. If I see how the market has reacted since January. So if you look at the January here, this was the high, and this is the low that we have seen in this particular year. So in this particular, if you see, we basically have a volatile market which tried to go up, corrected sharply, went up, then corrected sharply, is trying to go up. But as it is going up, the price is a little uncertain here. The price is a little uncertain on this. So consolidation sometimes in the market continues for many months. But India is on a growth trajectory. The whole world, the corona is receding. Vaccine has come. So, a very big down move, unlikely. Corrections, yes, that happens. So, another index which is important is the banks. And if you look at the banks here, so the banks are also, having more or less the same pattern, same as Nifty. This was the start of the year, went a little up, correction, rallied up, and then it is almost going on the same. So consolidation, corrections, major upside, no. Consolidation, yes. That is what looks into the market here. And if I am going back to the index, the Nifty, and this is where it took support in October 2020. So if I draw my levels here around this level, and in a bull run, corrections are normal, they are bound to happen. And that is when we get opportunities to get into the markets. Okay. So so far we have a 38% correction. That is what happened around here. And if it comes back to this 38, this will form a double bottom. So in a worst case scenario, you might see it coming back to 13,600. Best case scenario, it'll come back to 14,300, and then from here a breakout can happen on the upward side. So that's what can happen. If I looking at the Bank Nifty more or less, this is where it took support around this level. And Bank Nifty had a more deeper correction. If you see, the correction is Bank Nifty was almost till 50%. And right now at this stage, we are seeing that the highs are not being maintained. High, lower high, and a lower high. So there is a selling pressure on the banks. So just be careful in your banking trades because there is a selling pressure. Even today, when the market is up, if I'm looking at the Bank Nifty has not really taken the upside. Bank Nifty is more on the downside. The trend is down. So banks are a little weak. But overall, if you see our market, we are in a very bull market. India is on a growth trajectory and the market moves up. So let's look at this is the yearly chart. You see here, this is every year what happened to a market. So let's make the base here. See, this is the base around this level. And the market was at 1,000 in the year 2000. And since then, we can see with this was the 2008 crash, 2011 a little crash. Otherwise, the Indian stock market is more or less a reflection of the Indian economy. Just a minute, guys. I'll have a look at my trades that are going on, and then I'll come back to you. So today was a good trading day. This is an account in which I live trade with my traders every day. I give them practice. So I booked a profit of about 21,000 rupees here, and I'm carrying a swing trade till next Thursday where I'm already making a 1,200 rupees. And here I will be, working on maybe a potential profit of at least about 20 to 25,000 rupees. And with the capital that I'm using is about 8,75,000 rupees. And a good intraday and swing trader tries to make about 10% a month from capital. A portfolio builder tries to make about 2% a month from the stock market, which is capable of gain if we have the right skill set. But overall, your bias should be long because we are in a very bullish market. Look at here, the last 20 years of the market, it continues to go up. So we have no reason to say, oh, this will go down. Now, let's look at some stocks, guys. Let's go back to mainly the blue chips. These are the top blue chips of India. Axis Bank, HDFC Bank, Infi, ITC, Kotak Bank, LT Reliance, SBI, and TCS. So let's open up the market leader Reliance. And we see Reliance, if you see, this is Reliance here. And Reliance is not a very strong stock lately. It went far away from the balanced line, came back, then tried to go up, didn't go up much. In fact, it broke the balance line once, And now also, even with the market up today, Reliance is down. There is more selling pressure on Reliance than buying pressure. So put options, bearish option strategies, spreads, you know, short in futures. So that could be a good way of looking into it. You can short the rallies in Reliance. That can also happen here. And if I see here in Reliance, I have a gap that is still there. And in any sharp down move, this gap can be filled. If you go to Nifty, you would have seen that hardly any gap has been left unfilled. So that would be one level in a steep correction, not immediately, but whenever there is a steep correction, keep an eye on that gap. Then, if I look at, let's say, TCS, the market leader in IT, so TCS had a big up rally, and now we see there is some correction coming in TCS also. It has taken a healthy correction moving up, and if you see it is dropping, basing, and maybe a little more drop is due in TCS. So dips become a good opportunity to buy a good stock like this. SBI is a classic one. I've been talking about SBI for, I think, last one also I had this. When SBI was here, I said it has left a glaring gap down at 355 rupees. And there is hardly any strength in this stock. If you see here, it tried to rally up, but gapping here, high, lower, high, lower, high, lower, high, lower, high. So it is actually a good shorting opportunity almost till 355. And if you are a futures trader and you can, how to short the trade, that's amazing actually. That's a very good opportunity that you can look at. Then another market leader, Larsen and Tobro, is going pretty strong. And with the economy opening up, I think more long trades can be taken in this one. Then the volatility index is going down. It's also called the fear index. When the fear increases, it goes up. When the fear decreases, it goes down. Another IT major, Infosys, is going strong. Then ITC, the cigarette company, which also went into FMCG, I think the rally is fizzling out. It has been on this level for, I think, quite some time. And a break below this level will take it further down. Maybe a good target can be 180 rupees. Guys, this video is for analysis purposes only. It is not a recommendation to buy or sell. Stock market is subject to market risk. So is life. So is everything. So let's look at Kotak Bank, another bank that is going strong. And in this, what I'm seeing right now is a weak head and shoulder, which normally gives a selling pressure. Then if I'm looking at the two HDFCs, HDFC and HDFC Bank here, they're also, coming into a correction mode. And the P of the Nifty for the moment is close to about, I think, 39.40, which is pretty expensive for market. But in a growth economy, well, as long as the money keeps on coming in, and for the last about 8 months, FIIs have been net buyers in our country. Huge opportunities, growth coming in India. So as long as their money keeps on coming in, the market will keep on going up. HDFC Bank, another stock in consolidation. And this one also has left a glaring gap on the way up. So this can be a good target for this at about 1477. The market is closed now, guys. And my day has finished with a profit of 21,817, and one of my swing trade is going on. So before I close, let me look at gold. Because as the economy will open up, gold will go down. Remember when gold was at 54, 55, it will go back. You'll see a video of mine where I said that gold will correct at least till about 40,000, because this was a big imbalance, and as the economy will open up, the balance will come back, and that's what gold is doing. So if I look at gold, this is the gold mini contract. And you see, that's exactly what gold is doing. Gold became very imbalanced, and since then it has been continuously going down, and I think it will continue to go down. This is a good level to look for. If somebody is interested in buying gold, I think that can be a level to look for, around 40,000 rupees levels. Sure. That was from my side, guys. This is Pathfinders Trainings, that's my company. And we specialize in teaching and coaching people for coming into the stock markets, whether you're a portfolio builder, options trader, you're doing swing trading, intraday trading. You need to practice, you need to learn, you need to strategize it. So, and there are free trainings that happens here. There are also the paid trainings that you can go for and become a part of it. There is a course on trading psychology. There is a lifetime online stock market training. We have got a swing club. We have got an investors club. We have got options club. We have got an intraday club. And people come here and learn. More than 5,500 students have passed in the last 12 years. So I encourage you to come and learn. Just go down on the link that is given, click on it, and somebody will contact you. And thank you very much for coming into this session. And I hope this analysis will be of use. I keep on regularly doing this analysis. So make sure you subscribe to the channel so the regular updates can be given. You can go on the website of mine and do a free registration. On a free registration, there is a special free gift that comes to people. So you can go on the website and do a free registration. Thank you very much. This is Yogeshwar Vashishtha signing off, and I'll see you again in one more session.